All right, everybody. I would like to introduce you to our final presentation here at the Planet MicroCap Showcase Toronto in partnership with MicroCapClub. Before I do introduce, thank you all for, man, what a day. It's a long day, a lot of presentations, and very cool to see so many of you in here sticking around to hear what should be an amazing fireside chat. So without further ado, I'd like to introduce this fireside chat hosted from Martin Toner from ATB Capital Markets with Amit Bohensky from Zoomd Technologies.
Thank you so much. So yesterday, I was 160,000th in line to get Blue Jay playoff tickets. And I'm sitting there and I thought, I wonder if Amit would have a trick to help me with this. My name is Martin Toner. I'm at ATB Capital Markets. I'm an equity research analyst covering what we call growth and innovation. It's mostly Canadian tech. And I love finding companies that are creating shareholder value through innovation. And in my opinion, Zoomd is helping its clients with something really important that's pretty tough. And yeah, pleased to have Amit here to talk about it. We launched coverage on this company 2 days ago. We got a $4 price target. I don't own any of the securities, and I don't believe we've done any business with these guys. So Amit, why don't you kick things off and kind of give us the origin story of Zoomd? Because I know it didn't start yesterday, right?
Thank you, Martin. Thank you, everybody, for coming. And I have some people that I know here that are already investors in the company. For those of you who are not familiar with the story of Zoomd, I'll start why I call the company Zoomd. I am responsible for that strange name because everybody asks me, is ZOMD? And no, we are not doing anything related to medical. I thought that if I couldn't get the name ZoomED, like Zoomd. So I bought the name ZoomD and nobody got it till then, and it stayed. So that's how it works. What is it that we do? So the entire vision of the company is based on the fact that big brands, companies like Amazon, like NBA, and many of the companies that are very known that we serve, GoHenry, Fanatics, big brands, they need to keep ongoing registered clients. They need to get clients constantly. They are reporting this on their earnings on a quarterly basis. And usually they have different conservative ways that they do that. They use the Facebook and the Google. We serve like an additional arm, going in the places that they wouldn't search with a spotlight and searching for additional clients that they can acquire.
And that's great. So give us the origin story of the company, when you started it, why you started it, and then how you got to where the company is now.
Sure. So 10 years ago, Flash Track, a friend of mine works in one of the known companies, a US-based company, telling me that he's struggling, he's a CRO, struggling to get more clients, explaining me that he works on what we call walled gardens. Walled gardens is Meta, walled gardens is Facebook. Why it's called walled garden? It's like a big publisher. You have a dashboard. You can do different advertise there and try your luck. Maybe you can get people to buy in your product or not. And he tells me that he can't get additional clients. He could not pass the barrier. And I ask him, why don't you go to the open internet? 50% of the people are not browsing just in social. They go to the open internet. Why you are not trying to do customer acquisition from the open internet? And that's where the entire idea started. Can we build a solution that can orchestrate customer acquisition from the lower part, open internet? I mean, if I'm Amazon, I know how to advertise everywhere, but how will I measure if CNN or TNN or Politico or a specific advertise that I will put in a specific app can acquire me a client? I can do that if I use Facebook, if I use the walled gardens. But what if I can get a bunch of clients from the open internet? And that's how this company evolved. I decided to develop that solution.
Fantastic. Maybe you can kind of tell the audience what you're giving the clients and why it's high value and how it's tied to their success and their revenues and profits?
Sure. So our company is not a consultancy. We are also not an agency. Our only KPI is getting you customers and how much money they put in. So imagine that you are a CRO or a CMO in a company, and I pitch you, and you tell me there are so many companies like you, so why I should go with you? It doesn't cost you. It's called CPA. It's per action. Only if I get you paying clients that are marked clients that I got you. So I'll got you people that will download your app and do an acquisition. Only then you pay me. So in a way, I'm fencing your investment. And by doing that, actually, we are not perceived as a commodity because you're doing nothing about awareness. Some of our clients, 500 Fortune companies, we are not coming and claiming that we can market companies like Amazon or NBA.com. But how is that we won in a big tender, 2 companies out of 40 promoting the app, winning to be the promoter of an NBA app? It's because we are there. We are getting them clients. We are the system that allows them to get more clients, and we get paid only if we get them those paying clients.
That's great. Can we talk a little bit about some of the key verticals that your clients are in? And I don't think everyone necessarily, people think intuitively know what the open internet is, but they don't necessarily know what the key properties and key applications in that space are.
Sure. So the company, I'll find a slide for that. This is a list of some of our clients, just for you to see. All the clients for our company are direct clients. Some of them are very, very big names, and this list is expanding. For some clients, we are operating more than 10 and 15 geographies in customer acquisition for the open internet, and there's a very big dependency. Some of those clients have been with us for more than 5 years. The biggest client is with us for 7 years. About your questions about diversification, those are the categories that we act on. We have specialty and machine learning and some AI involved in that, and a lot of methodology in areas like entertainment, in areas like e-commerce. We can even claim that we are one of the best promoters for fashion e-commerce for customer acquisition in the world. This gives us strong power. So when a new client comes that belongs to one of those categories, we are able to supply him with new additional paying clients. Now, per your question for what is called the open internet. So as I mentioned, Facebook is one tool, has one dashboard. And with this dashboard, you can put some advertising in Facebook and play with it. Facebook doesn't promise you it will work or not. In most of the cases, it will work as you will optimize it as time passes by. But what happened to the rest of the world? What happened to more than 100 million websites that are out there? Is it possible that you can advertise in those websites or in a specific application or in a CTV or any other digital asset and gain more clients? We cannot avoid looking that there are other areas that there wasn't attempt to get those clients. And that's what we are doing. We orchestrate the ability to find additional clients on these 100 million websites that are worldwide. It can be a CNN, a TNN, Politico, National Geographic. Any website is a potential place that I can advertise and find client. So as a decision, we've built it as an orchestration layer that speaks with the entire internet for the purpose of acquiring clients from there.
That's great. Okay, so let's talk about in-app consumer spending, because I think that spending is important to some of your clients. What are a few examples, and how important is that to Zoomd's client base and ultimately your company?
It's a very good question. As we are mobile first, our first intention is to try to create first acquisition or first transaction, and it's better that the customer will download an app. So let's say that Amazon, which was one of our clients, will make someone see an ad and he will download the Amazon app. So the more you can make more transactions on those apps, we get paid. In other words, this is an asset on your phone, and we can help Amazon or other clients that we have to promote the ability to do upsells and cross sales. And we are one of the only companies who's doing that on those categories on the open internet. And the entire message is that we want to go to those clients and tell them, listen, you have already a marketing team. We don't want to step on their toes. We don't want to do their Facebook and their Google. We are also not doing your creative. But you are leaving on the table clients on the internet. Let's get them for you, and you only pay us when we get them.
So revenue growth has turned a corner, I would say. CAGR of revenue last 2 years has been roughly 50% annually. Profitability has followed. Can you talk a little bit about what's changed, what's driving revenue growth, and then a little bit on the business model? You know, why are you able to be profitable?
Sure. So we've done many changes showing that growth, and maybe I'll show some more slides that can show as that while we increase in revenues, operation cost went down. Maybe this is also a very interesting slide that makes investors happy, that you can see what happened along those queues, or that one is the slide that I like the most. So some of the changes we've done are incorporating AI, as we added AI, and that helped us to decrease operation cost. You can see operation cost went down by using agentic systems. We are working collaboratively with the client. So we are running for the clients, so mega clients, we are running them the campaigns on the open internet. So let's assume they gave us some creative material, like a banner, and the banner is in green. And I'm running a campaign in France, and it doesn't work. Our machine learning will tell us green color doesn't work. We used to pick up the phone, call them and say, do you have anything in green, in red? Because green doesn't work. But now it's all AI, it's a chat. The bot will send a message, do you have anything in red? They will send it to us. And by doing that, it will cut cost of the campaign. The campaign will be more efficient. And that's how we decreased operation cost. And the business model allows us to grow within that client in different geographies. So we are targeting clients that are on 100 countries, 80 countries, which allows us to grow more and more within those countries. The payment methodology is based on paying clients. So on every client that pays us, we get a fee. The fee varies between the categories. So if it's a fashion type of a client or it's an entertainment type of a client, and also it depends on the geography. Do we bring a customer that download an app, a customer that lives in Germany, United States, or is it someone from Central America? That changes the matrix of the payment.
I'm going to ask a couple more questions, and then we'll open it up for questions from the audience. Can we talk a little? Okay, so ad tech has a bit of a tough reputation. There's a perception that, you know, a product tool works for a time and something happens, competitor emerges, there's a change, and it stops working. Is that a risk for you? And if not, why are you insulated from that risk?
It's a very good question. So AdTech changed their name later on when they called themselves programmatic marketing. You can find also some very big public companies like AppLovin, like the Trade Desk. We decided as a company, and we have a lot of technology in this company combined with methodology, that we will not represent a particular line of business with that industry. I will explain myself. There are some companies that are owning an asset, like a website, and then they tell their clients that they will market their clients on that website. And that website might work today and might tomorrow might not be relevant. We didn't want to own real estate. We wanted to be a brain that can orchestrate the right mix and match. So we are, as a company, instead of to be with an asset like the Trade Desk, they have something which is called the DSP. We are integrated to DSP. DSP is like exchange that is connected to many websites. They own something like that. There are many like that in the internet. Instead of to own an asset, we will integrate to the asset. The same for AppLovin. They have specific apps that they are promoting, advertise. instead of us to own apps and sometimes to make them work or not, we will integrate to those apps that they have. We will pay them a fee. By doing that, if today AppLovin doesn't help us to promote our clients, we can move to another source. We are working on the open internet. That is our freedom. It allows us to do the right mix and match and to choose which are the sources that we can advertise on behalf of our clients. We've seen companies in AdTech that were making a lot of money because they were sitting on one walled garden. They would do arbitrage on search. They would work a lot on Facebook. But the next day, when Facebook or Google, walled gardens, they will have a change in regulation, those companies will collapse immediately. When you are working on the open internet, it allows you to do this mix and match. If one asset, you cannot advertise on it and get yield, go to the next one. The entire idea is to activate an algorithm that will be smart enough that will help you tailor the solution and not to own the asset.
Can you help the investors understand a little bit about the volatility of revenue? Investors love recurring revenue. This business model is more transactional. Your customers obviously aren't going away. What should investors expect, like in terms of revenue growth, and how should they look at it?
As you can see, the last 10, maybe 11 quarters, there is a consistent growth that is being shown. First of all, as a company, if tomorrow one of you decides to be a shareowner of this company, I'm always available and can reach to me very easy. Some of the investors here know that I'm available very fast to be reached. What you see here is a consistent work of growing within the existing clients. We expanded to more and more geos within those clients, and that's how we grew. And we plan to do this again and again. With the existing clients that we have today, this company can reach to hundreds of millions of dollars. Some of those e-commerce giant clients like Amazon or like Shine are massive. We are not even a fraction at the moment from their customer acquisition budget. So there's much more where to grow for that. And you should expect that this growth will continue. But as we grow organically, we also look how to grow unorganically. We look at different channels that we can expand. For example, there are agencies, giant agencies that do work with giant companies. Those agencies are not in the field which is called performance marketing, which is where we are. And therefore, we are working very hard, and you should stay put and look what's happening in the next couple of quarters in our company, where we are seeking for more and more partners that can share with us their clients, where we can help their clients to get more customers on the open internet and grow more and more the company.
How lumpy could revenue be? Is there seasonality, and should investors expect quarter-on-quarter growth?
If I'm an investor and I'm owning a stock here, I wouldn't judge revenues quarter over quarter. Those days are ended. I would suggest you to look year over year. I will explain why. As we have sometimes a yearly agreed budget with a client, it can happen like happened to us in 24, in 23, that a customer will ask us to halt a budget for a quarter because they have their own strategic reasons for that. And then the next quarter, they will bring it back and even more. So you will see an increase, and then a quarter decrease, and then the next quarter, a very massive increase. If you want to judge revenues on this company, judge it year over year and you will see growth. I would measure this company on a quarterly base on the EBITDA and most important on the earnings. We generate profit on a monthly base. That is how I will measure the company. And even if revenues goes down, this doesn't mean that we lost a client. It only means that strategically a client asks us to wait for a second on a budget. Now, why is that as a company we are not announcing that? It's because we are under an NDA with those clients. If, for example, an e-commerce company decides that one quarter they halt a budget because they have something more strategic going on the next quarter, if we reveal that, their competitors will come in. So we cannot talk about that. We can only say that the budget is not lost. it will be recovered in the next quarter right after.
That's great. Thanks, Amit. Any questions from the audience?
I really like your company. So first question is for a new client, when they become a new client, do they sign up online or they have to meet your company people and sign a contract?
We do have some clients that we haven't met in person. The company reached to a stage which is, the field is called customer acquisition or mobile customer acquisition. Zoomd is at the moment ranked #1 in the last couple of years in any of those competitions. So that funny name Zoomd is now known. So we are being approached many times. Companies leave us details at the website. We make a fast contract and we are running. Why it is a fast contract? There is no integration. You measure me by bringing you clients. So the only thing you're giving me, actually, you're giving me your creative, which is your banners and your pictures and your videos, and then everything is up to us. Unless you have some more information to give us, we will go and start do marketing for you in the open internet. So there isn't a need for direct interaction, but the collaborative environment that I've mentioned before will all the time send feedback in order to optimize that campaign.
You find the customer, do they pay, your client pay you one-time fixed commission, or they pay you variable based on how much they purchase for the lifetime?
It's a very good question. It very much differs. So we have clients that we get paid one time when we get that client, and we have clients that we get them on the lifetime of the client. And we have sometimes cases that it depends on the upsales and the cross sales that we are even responsible to help that client to make a decision, maybe to buy another shirt or to do something additional.
Technology based on the market measurement to monitor if client purchase from you, right? So you and then what market measurement technique is developed by yourself? You know, I saw on your website, you have partner like amplify, adjuster. So there, I look at 5 measurement company. So do you use one of them or all of them combined together?
Very good question. First of all, our technology, we can talk about this for hours. I am actually not a marketing man. I am an engineer by trade. I am responsible for part of the tech here. It's even part of it patented. So it's our own proprietary technology. We wrote the system. And when people ask me, explain us what your system does, I tell them, imagine that we are, if they are investors, then I'll say, imagine that you are one big exchange connected with pipes to all the websites in the world and just trying to do a lot of A/B tests to see what works and what's not work. And when something works, we record it. So we remember to try it again because it was successful. When something failed. The names that you've just mentioned are partners that we are working with them. They are an SDK. For those of you who doesn't know what is an SDK, it's a piece of software that usually a supplier puts inside the app. So they give you ability to measure the success of the actions within the app. You use those suppliers because, let's say I made you download an Amazon app, and now you download the Amazon app, and now I want to promote more things for you to do on the Amazon app. I need to find a way to see the actions that you are doing on your app. Those names that you've mentioned are companies that provide that ability, so we can see what's happening on the app and decide how to help you and promote. This is a famous question. That's why I told him that I want this on record. So yeah, the company is based on Israel. I would say that Israel passed through very hard, harsh 2 years. We couldn't get a flight. If I want to fly, if I want to meet a sea level in the United States, I need to fly to Dubai. It's 4 hours to the east, and then fly 14 hours to the States. I'll pay $22,000 for a ticket to meet. And these are the results in those 2 years. And this is showing, first of all, that this company is very strong. We have 0 clients in Israel, 0 suppliers in Israel. The engineering is coming from Israel. So a lot of people that are very smart that work in this company. So that's one thing that I wanted to state. We went public in the Toronto Stock Exchange because we wanted to be close to the next exchange. And we couldn't go immediately to the bigger exchange because we were too small. So we felt that if we will go to the smaller exchange, show some strong revenues, show consistent results, then when the time comes, we will list in the bigger exchange, and we will. Sorry, I couldn't hear you. You changed a lot in-app purchases, and to what degree is that? As we are a layer on top of the ecosystem, as I've mentioned, we do not possess a specific asset. Therefore, we are not affected from any type of those regulations. As we are acting as a promoter inside an app, we are actually working on behalf of the owner of the app. When you usually download the app, there is an entire clause that you approve, and then you download the app and you use it. And as we are serving as a supplier for that app owner, we are not affected, as the owner of the app is not affected. But if the law is changing about the side of the app, then that doesn't be effect. Well, we should wait for that happens. The world of apps hasn't been changed for a lot of years, but once we made a customer to download an app, or maybe later in the world, in the future, there will not be apps, there will be other type of units, it doesn't matter. But as long as we already know who is this customer, we already know ways that we can target that client in different way of advertise and allure or attract a potential transaction.
Well, you guys really have a best-in-class earnings growth and like incredible forward. Where are you at with the share buyback?
It's a very good question. We do have plans for that, but we have other plans as well to use the capital that we are collecting. We are considering potential M&As and some other processes as well. I want to thank Martin for hosting that very good meeting. Thank you all, and I hope to make you proud investors. Thank you.